This is Things I Need to Learn in Life I Didn't Learn in School, covering everything we should know as adults that got glossed over in our classrooms. With your host, Wave News anchor, Dawne Gee.
A big thank you once again to everyone joining me, Dawne Gee, for things I need to learn in life I didn't learn in school. This one is so important. Well, hopefully all of them that I bring to you will be important and enjoyable for you. But today we're talking about part of the American dream. I have a dear friend and someone who has been in the home industry market, I would say probably most of his adult life. Osia Craig is joining me. Osia, talk about what you do.
Be glad to. First, I just want to thank you, Dawn, for the opportunity to come out and speak with you today.
Homeownership
is still
so
monumentally so important. So, and I think talking about it is important because it removes some of the misconceptions of what a lot of people think that you have to be, what type of position to be in to own a home. We want to remove some of those misconceptions. And so something like this, informative, educational, huge, like in everything, but so much more in home ownership, that's for sure. But what I do is I help people get lending to purchase a home. That's my job. I'm a community mortgage lender, and I've done that since June 2nd, 1986. So I just turned 36 years about a week or so ago.
Not 36 years old. He's been in
the business.
the business for 36 years. So let me just say this so I'm transparent, and you'll see this anyway as we talk. Osia and I have been friends since we were kids, yes. Like young kids, and playing in the street, touch football, and talking about dreams when we were kids of what we were going to do. And so I know you very well. And I share a lot of my personal life in these podcasts, but I was a single mom, divorced. My life didn't go the way I thought it was going to go initially. And I can remember saying to you, I will never own a home.
And
you were like, what?
Of course you can.
And then I was renting.
Right.
And I remember you saying to me, why would you pay that rent when it's never going to be yours?
That's correct.
Yeah, and you said, and we talked about what I was renting, and you laughed and said, your mortgage payment would be cheaper.
Owning can be cheaper than rent in most cases.
And no, I was talking to one of our producers here, and I told her that, and she had little tears in her eyes, and she was like, I don't think I'm ever going to be able to do it. So let's start with, where do you start?
Absolutely. With everyone, here's what we always tell each potential home buyer, and that is get prepared. And how you get prepared for qualification, we will take, you got to remember, this is financing 101, okay? You're always going to be treated based on how well you handle your financial situation. How do I pay my bills, okay?
So you're talking about, again, that word, those two words, credit score is always important.
Absolutely.
If it's terrible, and let me just say, when I was that young single mom, after I got divorced, I had some trouble and my credit score was not the greatest. And you told me, start working on that credit score, start paying your bills on time.
Correct. Here's what I always ask people up front, and that is, do you know what your credit score is? Most people don't know these days, okay? So the next question is, how well do you maintain your finances? Are you paying timely? That's the big thing here, okay? And that is everything, whether it be regular traditional credit, credit card, student loans, whatever, or your non-traditional credit. How do you pay your rent? How do you pay LG&E? How do you pay your utility bills? Those things will follow you everywhere you go in the financial world. So I always like to ask some real basic general questions, and a lot of people don't always know where their credit lies, even though they know how they pay, okay? But here's the thing. My job doesn't cost anything. It's free to get pre-qualified. And that's why I'll tell everyone is where you want to start, is where do I stand? And when we do a basic credit application, it's going to allow me to pull a tri-merge credit report. We're going to get credit scores from the three major bureaus, and everybody's heard of them: TransUnion, Experian, and Equifax. Okay? And in our world of real estate lending, we will, in 99% of the time, will qualify that person on a middle score. So the high score
what does
goes
that
down.
mean?
Well, between those three major bureaus, they have a score. Okay, each one of those will have a score. The high score goes out. The low score goes out. So that middle score defaults into our system, and that's what we're going to qualify you on from a score perspective. Now, we talk score all day long, Dawn, but I like to also remind people that history will trump score all day long. And let me give an example what I mean there. So let's say we pull that tri-merge credit report. Let's say the middle score is a 650, okay? And I'm gonna tell you, in most cases, I'm gonna get you approved for almost any loan program at a 650. However, here's the thing that defines that 650. We traditionally go back 24 months of how you paid your bills. That's our underwriting guidelines, okay? We go back 2 years.
So it's not like 7 years, you know?
Right.
Okay.
Well, we ask questions. We have declaration questions on our application, and we'll ask, have you had a bankruptcy or a foreclosure in the last 7 years? Because that can follow you for that period of time. From program to program, how you answer that question can impact you if you're able to get a home today as well. And we can talk about that in a second if you like. But taking that scenario, that same 650, and let's say that I have two people come to my office today and they have the exact same credit score. Okay, 650, which in most cases you can have as low as a 620 and get approved for most loans on the market today. But one customer gets approved for a loan at 650 and the other one don't. I want to explain why that can be different, because I tell people a lot of times, Dawn, is that credit is almost like your DNA. Everyone's situation is a little unique, even though that score might be the same. And here's the example. Let's say that 650, the person who got that automated approval, is because their last 24 months, they've been timely. They've been on point. They pay like they should. And that's good. More than likely, I can get an approval for them. Now, the other person didn't get an approval with the same credit score because their credit score is reflective as of the recent history. So I'll give you an example. Let's say they had a 30-day late on a credit card, or a collection popped up, or that they didn't even know about. So their score could be going down, whereas the other one who's consistent, their score, because, you know, the credit score also is almost like, I guess what I tell people, an analogy is credit score kind of works a little bit like the gas prices, which I shouldn't have brought that up today, but traditionally, credit scores are kind of the opposite. Gas prices, if you drive down past your gas station every day, and you notice each day it kind of trickles down a penny or two or whatever, but then overnight it goes up 30 cents. Okay, that's the gas prices. Credit scores kind of work in reverse, because if you pay timely each month, it should slowly and gradually get better. Okay, based on utilization. But if you dropped the ball recently,
it goes quickly.
You can make one small mistake and you can see it plummet.
Bam.
So I tell people that credit score works in that fashion, okay? So that's the one thing I want people to know, that history can trump a credit score, even though all of our talks to people is you need to have this score or this score in order to fall into the proper guidelines for whatever product it is they're trying to get, okay? So it can be a little bit puzzling to people is, well, how come I'm not getting the right answer? Why are you telling me no? So that's a big part of it. So just remember, history can trump score all day long. It's important.
All right, so we know if we want to be a homeowner, we need to build that good credit score, pay on time, make sure you're doing that.
Absolutely.
If you did it for 2 years, then that looks really, really good.
Absolutely.
All right.
Yes.
So when I think about a home, and I can remember this, I was like, there's no way I can get a down payment. I'm trying to buy gas, food, pay for my car. I still have to pay rent, although I know I'm never going to own this place.
That's correct.
What's a down payment look like?
Well, there are products. Let's start with the first product. if there's any veterans out there, just know they are in a great position. If they served our country and they have a certificate of eligibility, they can actually buy a home with nothing down.
So
0%. If
you say product, and that means there is a way, there is a program. So there's one for veterans.
That is
what
correct.
do they look like? I mean, what do they say when they walk in? I'm a veteran. Can I get
That's exactly it.
So just so you don't have to know a name of the thing or anything like that.
Absolutely not.
I want to say this. I had never bought a home before. There was a program when I got my home for new home owners. You had to go through a program. I had to learn about taking care of a home. I had to learn, about all kind of crazy things.
It's budget stuff.
And I was thinking, why are they sending me? I had to go an hour, like a week for about 6 weeks. I did not have to have a down payment. Is that still a thing?
Still a thing. Absolutely is. There's products out there that will allow people to get funding for their down payment. Okay.
How do you find those? Okay, so we talked about veterans. Mm-hmm. We talked about first-time homeowners. How do I find out are there other programs?
Yes, there are programs. The largest organization in the state of Kentucky is Kentucky Housing Corporation, and they have ongoing down payment assistance. Okay, and with every first-time home buying product, there's always some other restrictions. Of course, first of all, you cannot have owned a home the last 3 years. So even if you owned a home in the past and you haven't in the last 3 years, you're going to be eligible to go first-time home buyer again.
Really?
That is absolutely correct. A lot of people don't know that either. Yes, you can. Okay, so keep that in mind. So that's a big point that I'm glad you brought that up. People need to know that I used to own a home 5 years ago. I can't get another first time. Yes, you can. And some restrictions are income driven. Okay, one is you haven't owned a home the last 3 years. We look at your income. And then, of course, the obvious is where's my credit score at? Okay,
Those are the
that. Right. So when I pre-qualify, what I like to do is ask questions. So when I get a call and they say, I want to get pre-qualified in OC, I have no idea where I stand. Tell me what I can do and how much can I buy and what is it going to cost me? And believe it or not, in that process of pre-qualification, we're going to answer every last question. And once I can define their need and where they are financially, how much money do you make? Have you owned a home the last 3 years? Are you a veteran? All of those things, we're going to zero in on the program. It's going to best suit their financial need so that we can get them the best in lending and put them in the best position possible to get the home that they want. So.
Yes. Here's another thing. I think I'm right when I say this. I know you'll correct me if I'm not. A lot of people, they see a home and they're like, this is the home that we want. Maybe it's $250,000, but they're not being realistic. Maybe the home is too big or it's too high, but that is the home that they want. Sometimes you can't immediately step into that dream home because you all look at what they make. What is that called? I know
that's a debt ratio. Every loan program is going to have a limit as to how much debt you can take on
according to what you make.
That is exactly correct. In most loan programs, we're going to qualify you based on your gross monthly income. That's what we're going to start at. When I pre-qualify people, that's one of the steps. We're going to take a look at what they make, and then we're going to look at what they owe. I'm going to back into those numbers to let them know what they qualify for. So
even before I start looking.
Absolutely.
Okay, so that way you don't get heartbroken.
That is exactly correct. So we tell people all the time, before you start to shop,
get pre-qualified.
Get pre-qualified. It's the number one thing to do. And I know we have a very unique industry right now, what's going on in the marketplace in terms of real estate, because we have a lot of challenges, more so than I've seen in my 36 years in mortgages. But traditionally, that's what you should do first. Get pre-qualified. It answers the questions. It's exactly what I can afford. What does that payment look like? What does that cost? Do I need down payment assistance? What am I eligible for? We answer all those questions when we pre-qualify people. So that takes away the question mark.
And pre-qualified means you have already checked to see if I qualify for a loan so that when I find a house, I can make an offer because I have that money.
That is absolutely correct.
And does it mean, though, that I'm absolutely going to get the house if they accept the money?
I'm going to say this to you, and in my history of doing mortgage loans, 99.9% of those folks, if you get pre-qualified up front, okay, and you find the home that you want that fits the parameters in which we pre-qualified you, yes to that answer.
If somebody doesn't outbid you.
That's correct. Now that's the thing
somebody
today.
can come in behind you.
Oh my God,
So
Dawn,
let's
let me
talk
tell
about
you.
the elephant in the room then.
Wow, it's a big
Okay.
elephant. Yes.
It's a big, a huge elephant.
Big elephant. Yes. Whale size.
So we've talked about all these wonderful things that people
Yes.
can do to get a home. Today's world is not like when I got my home. Can you even get a home? And I heard people are paying up to $30,000 more than asking price.
Now, Dawn, I'm going to tell you, the game has really changed in recent times because what you just said is absolutely true. We're dealing with, for the first time in my 36 years, we're dealing with a seller's market like we've never seen before, and primarily is driven by the fact that inventory is at an all-time low. So they're in a catbird seat in that if a nice home hits the market, okay, first of all, they're going to have multiple buyers, okay, and they're competing at the highest level. And you're right. So the only one who wins those are the ones with the deepest pockets. I hate to say that. And the thing is, untraditionally, people are accepting offers without home inspections, which we never say is a good thing to do. I want to bring that up while we're on that subject.
Right, and I can remember going into a home and I was like, I love this home, I want this home. And you said, get a home inspection. I was like, no, I don't care. And when somebody came in, and you have to pay for that, that's like $500. That's out of your pocket.
Right, it's an extra
Just so you know.
Yes.
But he came in, the plumbing was bad, the roof was bad, the windows were bad. You want a home, but not a nightmare home.
Absolutely. You don't want a money pit. And so that's why it's still important. But in today's industry, there are folks that are, it's such a competitive nature that they are removing some of the things that traditionally you would certainly want. And people are making offers above list price without inspections. They're even saying they're gap. Okay, you buy it for $300 and it appraised for $280, and you still agree that I'll pay the $20,000 if it doesn't appraise out, even though I know I'm off you more than the list. So we got so many things going on in the marketplace. It's not traditional, Dawn. I hate to spend a lot of time on it, but it is a true fact.
Right.
It's going on in our marketplace right now.
Okay, and we have a lot to talk about here, but what do you do if you want a home and you can't be that person that pays $30,000 over? I guess you just have to wait.
It's the most difficult thing to have to answer it that way, Dawn, but a lot of folks are waiting right now because they have no choice. If you can't win a bid, then you don't have the choice to be able to buy because of it. You know, I mean, I guess traditionally, if you take Jefferson County and the 7 surrounding counties at any given time over my career, heck, there's 8, 10, 12,000 listings. And right now, I think it's around 1,200. So stop and think about that, how difficult that might be. And over the last 10 or 15 years, we've done such a great job in convincing people to get off that rental treadmill and get into home ownership, excuse me, world. But it's difficult for them now because they're all excited and they're ready to buy. And now we are in this situation here of having inventory like we've never seen before, and so low. So it makes it tough. It's a waiting game is what it's boiled down to because of that reason.
And so when you say inventory, because people are like, it's a house. Like, what are you talking about? They're not building. Not as much as they were, because my daughter just wanted a privacy fence, a wood privacy fence, and it was three times higher than it was about a year ago. And we were like, what are you talking about? So people are not leaving their homes as much. Pandemic did that. That's first thing. They're not building.
That's correct.
And am I missing anything else?
And it's not that they're not, but affordable housing is what is lacking because of the cost to build today.
Because they're going to charge you. If that wood is 3 times, 4 times more, then you're gonna pay for that.
It's nearly impossible for a builder to build an affordable home based on price today. And you're absolutely right. And that's the most other difficult thing. Now, it's not this new construction isn't happening, but it's happening at a much higher level sale price. Okay, more custom, and even those can still be. You can price any buyer out. Well, if I qualified for 400, 6, 9, 12 months ago, I'm not qualified for that today. And the other reason for that is not just because of the cost of lumber and labor. The other thing is we also are dealing with a rising rate environment for the first time in several years. We had rates below 3% on 30-year fixed rates not that long ago, and we're not there anymore.
Let me just say,
yes.
I had looked at my interest rate, and I was like, wait a minute, like this is not a good interest rate. And I called you, and I said, people are getting crazy interest rates. I said, Osie, do you remember what my interest rate was? And you said, no, bring it to me. We looked at that. I got an interest rate that's unheard of. What's it called? What did I do?
We refinanced.
Refinance.
We refinanced your old mortgage and got you out of a higher rate into a lower rate.
And
good timing, by the way.
Good
yes,
timing.
Good
and
timing.
I'm going to pay my home off sooner than I would have. So you may not pay attention to the interest rates because you're like, well, I don't know about that. But pay attention to that.
Absolutely. It's important to do so. I mean, let's face it, it's a number game and a lot of things in terms of financing. Of course, lower the rate, less you're going to pay. And if you want to pay more, you're going to get it out of there sooner. So it's always been that way. But today, here's the thing I want to say, because this is the new term out in the marketplace in terms of real estate. Rates are up. I'm talking about we were in the 3s, and we even had some 2% interest rates.
I think that's where I felt.
Right. Yeah. So we got that low. We're nowhere near that now. Now we're talking.
So why do they?
5%.
Why is it raising like that? Like I'm not a numbers person. I'm not a math person. I just don't get it. Like, why are you doing that? You're making it difficult for people to live.
We keep hearing inflation, and everything's going up. Okay, and they said that it had to go up. I'm a firm believer that in our world of lending in this United States, that I still feel like if you own a home, it seems that everything else financially seems to go well. And what I mean by that, once you become a homeowner, you need furniture, you need appliances, you're going to spend money, right? It helps the whole economy when home ownership is at a high level. It just seems like everybody's making money. It's a great thing for everyone.
That circle of financial life.
That's right.
Yeah.
Absolutely. And unfortunately, now we're in a situation where it's playing its havoc on the housing market. And then we couple that with the fact that, like you said, in the last couple of years, people aren't listing their home. People have decided to stay.
It was a pandemic. People worked at home.
Right.
People stayed at home.
And so for that reason, we don't really have an answer as to why all of a sudden it all happened. We blame a lot on the pandemic, but it actually kind of started even before, March of 2020, that people were not selling homes as much. And it's hard to put a finger on, but if you don't want to put your house on the market if you don't have anywhere else to go.
Well, no, you can't.
So that's the other thing that kind of happened also. It seemed like that people just wasn't listing their homes. And yet we did such a good job for the past 5-10 years getting people in the game. Well, that was good because there was enough listings while we still had 8,000-10,000, but it's been gradually going down. Unfortunately, you couple that with rising rate and inflation, it's tough. We don't even know how we're going to get out of this bubble and how long is it going to say. We don't know. There's not a time frame out there. Until inventory gets better, then we're still looking at this very competitive nature of trying to buy a home, and whoever has the deepest pocket wins in most cases. But I will say this, and this was the term that's going on right now. We just came out of a 2-day conference with a National Association of Real Estate Brokers, and all those realtors were talking about, would you rather pay 5.5% or 6% on the mortgage? Don't feel like you missed the boat is what I mean by this, because we don't have 3s anymore. Heck, we don't even have 4s anymore for the most part.
But we hadn't had it like that anyway. That was a fluke.
I want to say it was because we've never seen rates, not in my history of doing mortgage loans, quite that low. We've had this, every 4 years it seems like it's a rotation. Right, so it's very circular. But today we're saying to people, would you rather pay 5.5% or 6% on a mortgage, which if you look at a 15-year average, that's still not a bad rate, compared to 100% rate on rental? Because you'll never own it.
I get you.
So did you get what we're saying today?
Yes, so you're still, at some point, like, if I was renting, I'm going to always be paying. But soon, I'm done paying for my home.
Because you'll never pay it off.
You'll never pay it off.
It's not yours.
I got you. You're right.
That's the new term that's floating around in the industry. Would you rather pay 5.5% or 6% on a mortgage or 100% interest rate on rent? And rents are just as high.
And they go up.
And they're still going up.
Okay.
They're record high. So that's another big point. Glad you brought that up.
What did we miss here? Let's say I don't qualify for some of the products we were talking, but again, if I come to you, ask, is there something special for me? Is there something? So make sure you ask that question. If I don't, and I do have to have a down payment, what's a down payment look like?
Let's go back and answer that question. Most loan programs, I mentioned VA, 0 down, 100% lending. FHA loans are 3.5% down. And then we have a variety of conventional loans, okay? And traditionally, that's a 5% down. But also Fannie Mae and Freddie Mac, these are the federal agencies. We follow their guidelines when we're offering conventional lending. And they have a home ready program and a home possible program that kind of falls under a first-time home buyer because they still will look at what your income is, okay? And they may even allow a buyer to get in with 3% down. So it's 3.5%, 5% minimum down payments on the programs that are out there for every lender to offer.
So ask the questions and don't get discouraged. This is kind of a special situation, but when my niece bought a home, the family thought, oh my goodness, here we go, our kids are starting to buy homes, and she was gifted money and thought, woohoo, I'm gonna put this money on my home, and it stopped everything.
Wow. Well,
what's it like? Somebody can't just give you a lump sum of money because they look at that and say, well, wait a minute, had somebody not given you a lump sum of money, would you have been able to buy the home? And then they don't want to put you in a home you can't afford. What do you do in a situation like that?
First of all, I'm curious to find out what the situation was there because gifts are acceptable on just about every loan program that we offer.
Okay.
So if you've got family, mom, dad, grandma, aunt, uncle want to help you buy a home, they can gift you money. It's just it is a process of verification.
That's what it was. It was a paper trail.
It's a paper trail.
I was like, are you kidding me? It's like they had to look to see when the money was put in, where, but I couldn't
where it came from,
wherever it came from.
As long as you paper trail it, yes, everyone can get a gift. If you got parents out there that want to help you, absolutely.
Hold on to everything.
And then, because a lot of people don't ask questions, that's why getting pre-qualified, know where you are before you start to do things is better off.
And don't just hold that money in a little jar. You need to start the paper trail. That was a problem.
Yes.
She had it in a little jar, didn't put it in the bank, and they were like,
I hate to say it, Dawn, but cash typically doesn't work in our industry. Okay. We have to verify.
That was part of the problem.
That was part of the problem because they did it the wrong way.
Yes.
It's okay to get a gift. It's just it has to be a proper source.
You can't keep it in a little jar. You need to.
That's absolutely correct. And I'll say it to you this way. Just like credit score is important and your job stability and how much you make and all those things are important, source of funds to close a loan is just as important. You can have all the other good credit score, I've been on the job 3 years, blah, blah, blah. But if you don't have the proper source of funds verified, that can still keep you from getting a full approval on a mortgage. But yes, gifts are acceptable as long as we properly paper trail it. And that's easy, though. That's a real easy thing.
I know it is, but everybody was just like, what? Like, why can't she have it in a jar? And, why does it have to be in the bank? Okay, you said closing.
Yes.
Let me just say this, and this is my personal problem. I hate closing on a home. When you close, though, again, that's money. That's money that's probably not included. If I'm wrong, make sure you correct me. In the loan that you have to have that closing money. Talk to me about that.
So when you talk about closing, we just talked about source of funds. Part of any approval is we're just documenting that, when people come in and they say, I've got X amount of dollars in the bank, we normally request at least the last 2 months of bank statement, asset accounts, okay? Checking, savings. If you got stock or 401k, that's an acceptable source. We'll try to get the most recent quarterly statement to identify that you have the proper source of funds needed to buy the home we're going to qualify you for. So it is part of the process of approval that you verify those funds. So that's why we say gifts are okay. You come in the door, your credit score is good, your job stability is fine. I just don't have any money. But guess what? Mom and dad said they will. So if I'm telling them that they're doing a FHA loan with 3.5% and they're buying a $200,000 home, we're going to calculate what it's going to cost. We're going to provide them a loan estimate that breaks down all the costs and fees associated with processing, approving, and closing a loan. Okay? Those numbers are going to be provided to that potential buyer. So they're going to know, okay, I need $13,500 to close.
So let me ask you this. Is it you, or do we talk to, who do we talk to if we want to say, I don't want to pay closing costs, tell them, and that don't work today.
Not today.
No. But in any other real life, if we weren't in the twilight zone like we're in today.
That's right.
Sometimes the seller, because they want to sell that home.
That's correct.
Will pay the closing fee.
That is absolutely correct. Every loan program also will allow a seller to assist the buyer in paying fees that are disclosed as a buyer cost, but it can be negotiated in contract. And that could be as little as anywhere from 3% to as much as 6% of the sales price that the seller can agree to pay on behalf of the buyer.
Yeah, see.
So that's a good thing.
If there's anyone that's listening going, I don't know what he just said, don't worry. Most people, I feel like, don't have a clue. So ask the questions, take the advice, have someone by your side.
Mm-hmm. That's what we do.
That's what you do. Anything else that we need to know as far as, don't forget, you need this money, or you need this, or you need that, because all of that causes stress if you don't know and if you are not prepared.
That is correct. Well, you've already mentioned one thing. I think that we've done such a great job over the years to convince, renters to get into the game of home ownership. And sometimes we're quick to say that, you don't need a whole lot of money to buy a home. That is still true. Okay, in most cases.
If you can find a home.
If you can find a home. But the reality of it is, you're right. Everyone needs to have verified funds in their bank account, even if it's just a minimum amount, because of what you just said. It's important that you do a home inspection. That's an added cost. That these are optional things, Dawn.
That's $500.
That could be anywhere from $350 to $650.
Oh, okay.
Depending on the size of the home.
And if you don't get that home after that, you don't get that money back.
No.
No. And then if you go look at another home,
you gotta
pay it again.
Another one. Because here's the thing, guys, that I would tell everybody, is worth your investment to pay $500 to make sure that when I close and it becomes my home, my name's on the deed, if anything happens to that home, it could be out of my pocket. So you don't want a money pit. You want to make sure that that home inspector is going to peel some layers and let you know if there's issues of major concern. Now, let's face it, you're never going to find a 50-year-old home that doesn't have some little major problem. But right. I mean, little minor things. But it's the major things that you want to avoid behind that. Now, let's go on to Number two, because you talk about over and above your traditional settlement charges or closing costs to buy a home inspection is an added cost, but then a home warranty. Here's what is the good news, okay? And that's negotiable also. Sellers have paid for a buyer a home warranty on your property, meaning if something major happens, it's under warranty.
It's under, okay, I want to make sure I get this right because I don't think I did that when I purchased my first or second home. But I purchased American Home Shield. That's my warranty. You mean sometimes you can get a seller to do that?
Absolutely.
Probably not today.
Yeah,
Understand, we're not talking
we're
about
dealing with a different time today, but it still
maybe
can be
later.
asked. Right. But it is an option.
Ask
it is an
anyway.
option.
So why would they do that though?
Well, again, as a seller, if we're not in the market that we're in your traditional buyer markets, sellers are going to do everything they can to take care of that buyer. Okay. So one might be to pay some closing costs. Two, I'll even pay for your home warranty.
For a year.
Right. That's really what it is. It's the first year.
Let
and you
me
have the
just
option to renew
say,
it.
a home warranty, if you don't have a
Monumental.
huge. I told my daughter when she purchased her home, thank you, OC, get a home warranty.
Get a home warranty.
And they may have paid for hers. And within 6 months, the plumbing was all kind of messed up. Would have cost her thousands and thousands of, would have probably cost Mama thousands and thousands of dollars. But she didn't pay anything but the deductible, which was, I don't know, $100.
Yep. Some of them, I think that's the most. Right.
And they came and put in all new plumbing.
And in each warranty, you certainly want to investigate what it all covers because they do vary. You know, some will even cover your appliances, you know, and things of that nature. So I think it's important that you do get a home warranty. You do a home inspection and you want a home warranty. Even today, if the seller's not willing to, you get it because, and especially for those folks who are buying without a home inspection, you know, get a home warranty even more so for that reason. And but then I think here's the other cost. You know, some lenders will collect for an appraisal fee up front. It's a part of your overall cost. But some fees are actually collected up front. There's some lenders who may charge an application fee or an appraisal fee. Most of those fees are a part of the overall cost. You'll get a credit for it later, provided you close, okay? But, so those are dollars you have to have available. And then with every contract, there's an earnest deposit that you have to make that contract binding. You're working with a realtor, and you're making an offer.
Let me just say,
don't
panic.
Don't panic.
If you're thinking, what are they talking?
Right.
Don't panic. It's really not as bad as it sounds.
I promise you it isn't. And all that's going to be explained. And of course, at some point, you know, it takes a village to get someone closed, okay? And our job is to handle that financing side. You know, you got a good realtor. They're going to help you with so many other things that we don't do as the financial person, but we will let them know why it's important because sometimes we're the first contact.
You're different. So you have a realtor, and then we have you. That's correct. Two separate things.
Absolutely.
Okay.
Absolutely. And because we're not licensed realtors, we don't complete sales contracts. It doesn't cost anything for a buyer to hire a realtor because 95% of those get paid by the seller who's listed their home, okay? And a lot of times there's two realtors. There's a listing agent and there's a selling agent. They'll split those commissions that seller's going to pay to sell their home, okay? Now, the reason why it's important to have a realtor because, you know, there's a lot of great realtors in this city, and they're going to represent you from a legal ramification. I mean, it's a big transaction. For most people, it's the largest transaction that they're ever going to make. And so for that reason, if they've never done it before, they don't know. And so a good realtor is going to make sure that, first of all, that they're going to request that you do a home inspection. They're going to talk about warranties. And of course, just like when you come to us and you ask what do I qualify for? And I ask you a series of questions, what are you comfortable with in terms of a payment? Sometimes I even go that far, Dawne. I mean, I don't want my payment to be over $1,200, okay? So when I pre-qualify people, I can do that.
You could technically get a home that you would pay a higher payment for, and you qualify, but you know in your heart, I don't want that.
That was the point I was making, that pre-qualification also has to do with what your comfort level is. Just because I told you qualify for $1,500 a month,
doesn't mean
that's what you want, right? Yeah. So that's the other thing. But then we have people who say they willing to pay $1,200, not only qualifying for $1,000. But that's why we pre-qualify, so we can get those questions answered. But these are key things here that we do. The realtor really takes care of that customer quite a bit. I mean, from the legal side of it, they're going to give them, they can protect them in writing an offer, because it's the things you don't put on a contract that could come back to haunt you, that you just agree to this price without any other conditions or stipulations, and you don't know sometimes until the appraiser goes out, or he may have found something in that home that, if there's an appraisal issue, a repair item that appraiser finds, 90% of the time, the loan won't close unless that work's done. And if it hadn't been negotiated, all of a sudden now you pay for a home inspection and an appraisal, and now that seller says, I'm sorry, but I'm not paying for that. And if you're not comfortable or have the means to do it yourself,
then you're stuck.
That's why realtors are important in this world, to make sure that they work with them.
I can remember when we were looking for my daughter's home, and we got the inspection. And he was looking at everything, and we were like, come on, dude.
24, 25, 30 pages.
Oh my God, I was like, stop it. But he kept looking at the dishwasher, and he said, something's not right. He turned the dishwasher on. The entire kitchen started to flood.
Oh, no.
We couldn't figure out, why is everything in here new? That's really nice. And went down to the basement. And he looked at us, and he started looking at the plumbing in the house. And he went, I'm not your mom, I'm not your dad, but I'm telling you no. And he walked out of the house. So we paid that, but it was good because we walked away.
I promise you. It's the best, one of your best investments. That's one of the starting points of, we want everyone to own a home and get that generational wealth started for their family, but you got to get that right home, and that's why home inspections are still today very important. It's okay if they find things, but the question today is, are the sellers willing to pay? Because
they can fix it.
Of course, they can agree to pay it, and we can still close, and you still get the home that you want. So you don't have to always walk away. Depends on what the seller's willing to do.
Okay, we're going to wrap things up here. I don't want to forget anything important, but again, your title is, you said have a realtor and have a, what are you?
I'm a mortgage loan originator. We got loan officers. We got different names, but essentially we do mortgage loans and we originate loans.
How do people find a you?
Well, they can just call me up.
Okay, so I'm going to give that information. But Osia Craig, you work for?
I work for Park National Bank, and just a little bit about the bank. A lot of people don't know about Park National Bank. We have one location at 545 South 3rd Street on the corner of 3rd and Guthrie, and we've only been in Louisville for about 4 or 5 years. I just started with the bank at the end of January, and they hired me because I started really pushing community lending. I'm a community mortgage lender is my title today, but I still originate mortgage loans, okay? Right. And the goal for the bank is to, whenever you talk about community lending, Dawne, we want the conversation to be where we're in it. And that's Park National Bank, and we're putting a lot into being one of the leaders in community lending. And the bank's been around since 1908. Our corporate headquarters is in Warwick, Ohio. We're huge in Ohio. We have over 90 branches in Ohio.
Wow.
Yes, we have one here in Louisville. We're a metro market to the Ohio corporate office. We have an office in Lexington. We have 5 in North Carolina, 4 in South Carolina. We do have a specialty loan program I'm going to leave you with. It's called Home Sweet Home. Basically, there's a couple of different ways to qualify for it. If you are a first responder, like a police officer, a fireman, an EMT, a nurse, a teacher.
Then there's a special for
program,
you?
3% down, no PMI. We didn't talk about PMI.
I don't know what a PMI. What is a PMI?
So every loan program out there on the marketplace, if you don't put 20% down, you pay private mortgage insurance. That's a lender's risk protection, because if the loan defaults, this insurance company pays that lender a percentage of the mortgage that's outstanding. It has been around forever. FHA has had it since day one. If you have 20% down, you avoid that coverage. But on this Home Sweet Home, 3% down, we're waiving that without 20% down.
Okay, so wait a minute, one more time.
Yes.
This is important.
Yes.
At Park National, and again, it may be at some other places. I want to make sure that I say that now,
Absolutely.
but it's called Home Sweet Home.
Home Sweet Home. 3% down.
And it's for?
It's for
firefighters,
police officers, EMTs, nurses, teachers. Yes, they can get that. Now, in addition, if they're purchasing in a low income census tract, they're eligible, even though they're not in any of those industries.
Wait a minute. If they're in a what?
In a low income census tract.
What does that mean, please?
If you go throughout all of Jefferson County, there are multiple census tracts. Based on those census tracts are determine the income per capita, those households, what their income is. So if their income is considered a low to income, we got moderate.
Then there's something special for you.
That's correct. So if they're in a low income census tract and they want to purchase a home there, they also can get Home Sweet Home. Not being a teacher or a police officer, you can work anywhere and be eligible to get that program. Okay?
It's so important. I remember being that person thinking, I'm never going to have a home. It is possible.
Very possible.
Just start planning. Start looking into it. Get your finances together. Even if you're not getting a home, you should be getting your finances together, because you never know what opportunity is going to come in front of you. Do you have a website or an email or anything you want to leave?
For anyone that is interested in getting pre-qualified, you can always start with a phone call all the time. You know, my cell number, you can call me on the weekends and evenings. It's 502-262-6950. Call me anytime. If you just say, hey, I'm interested in getting pre-qualified, what do I need to do? We'll take those steps through it. Or they can email me, okay? It's my first name, Osia last name Craig, Craig, at parknationalbank.com. Now, the neat thing about email, everybody's busy. If you're on the go, or if you don't think about home ownership until 10 o'clock at night or something like that, you can shoot me an email.
Yeah.
Okay? I can respond
to your
email. Yeah. And here's the neat thing. At the bottom of my email, there's an apply now icon. You can click that, and you can start to fill in all your personal information. I'll be notified, and I'll still do the same thing I would do whether you came to me face-to-face, or we did it over the phone, or we can do it in that fashion. And we can start the process of getting your questions answered. And by the way, I think he was going down that path, and I think we kind of diverted from it, but if you don't get an approval, let's say you want to get pre-qualified and we find that you have some hurdles, I will take the time to roll up my sleeves and identify what those things are. I think it's important that if I'm not giving you a yes today, that it's an obligation to me to tell you what things in which to work on to get there. And some people can do it very quick. Again, it goes back to DNA. If you really have some real struggles, then, you know, there are some credit repair companies out there that do a pretty good job of helping holding your hand, because it's not always easy to making those corrections. Okay,
I had to make some repairs.
Yes.
When we first started, and you didn't say no. You said, hold on.
That's right.
Let's get this fixed, and then my yes came. I appreciate you.
Oh my God, honey, it's always a pleasure. We greatly appreciate you. On behalf of Park National Bank and myself, thank you for your time and what you do for this community. I think you're incredible. I mean, we go way back, so I thought you was incredible for a long time ago. But yes, we just love what you do.
I appreciate it. I just think that people need to know they can have this part of the dream. They can have generational wealth. And when we say generational wealth, that means my home is my home. And when I leave, then it is my babies.
That's right.
When they leave, it's their
That's
babies.
That's what we call it, generational wealth.
Yes.
Absolutely. So it's so important. And again, that's the word, that's the theme. Home ownership is still in. Even though we've got our struggles in trying to get folks in, don't give up. Absolutely. Absolutely. Don't give up.
Again, things I need to learn that I didn't learn in school. I hope it's probably overwhelming if you're one of those folks that said, I want a home. I need a home. You can
Absolutely.
do it. And now we've learned what we need to do. Again, I'm Dawne Gee. If you have something that is in your head and heart and you say, why don't I know this? Email me, call me, let me know, and we'll talk about it. Thank you again for joining us.